Our word on the street tonight, dividends. Investors who shy away from dividend-paying stocks next year because of higher taxes will miss some of the best income sources of 2013. So says David Peltier. He's portfolio manager at thestreet.com. You know, David, most people do like dividend-paying stocks, but they're very worried about the implications of higher taxes all around, whether it's on cap gains or income taxes. And so they're staying away from dividend-paying stocks. Make a case about why they should buy them.
Sure, well, you're right. I think dividend taxes and investment taxes in general will go up in 2013. But dividends are a very important part of investing. You're seeing more and more companies in the past decade, especially in the technology space, are paying dividends. In fact, over the past century, 40% of the gains in the S&P 500 can be attributed to dividends.
All right, and there are a lot of choices even now. What should investors be looking for? Are there any themes in choosing the best dividend-paying stocks?
In general in investing, but especially with dividends, I like to see growth. Growth in earnings leads to growth in dividends, and the market will always pay up for growth, but I need to see that the dividends is sustainable. I need to see that earnings are at least twice as much as the dividend, and also that the company has a good balance sheet behind that.
Let's go. You have three stocks that you're going to recommend to us. The first one on the list is Boeing. Tell us why you like this one, even though the stock has been so-so this year.
Sure, Boeing has lagged in 2012, but the company did just boost its dividend. Has a 2.6% dividend yield. That's higher than the 10-year Treasury right now. The company is really in the midst of a multi-year cycle for spending on commercial airplanes. And you're seeing the higher dividend boost. You're also seeing the company buying back stock. And you'll see the earnings accelerate all the way into 2014, 2015. You'll see more dividend increases down the road.
All right, Johnson & Johnson, J&J on the New York Stock Exchange, also on your buy list. Tell us what attracts you to this one.
Another consistent, steady grower. A pristine balance sheet here. Company's boosted its dividend 50 consecutive years. 10 years from now, I think we'll be saying that the company's boosted its dividend 60 consecutive years. It really is like clockwork. And you have a 3.5% dividend yield here. I think the company will boost the dividend in April and going forward.
David, you gave us the name of a little-known company that's on your list, Cott Corp. Tell us what it does and why you picked this one.
I like Cott in the low dollar space. Cott makes private label beverages, competes with Coke and Pepsi, but more on the generic side. Company just initiated its first dividend. It's paying out 6 cents a share each quarter, and that's a yield over 3%. But again, this company has the earnings to sustain the dividend and also grow it going forward.
All right. Any disclosures, David? Do you own these stocks?
No, I'm restricted from owning these stocks.
All right, thanks so much. Have a great holiday. We'll see you soon next time. David Peltier, portfolio manager at thestreet.com.